Good morning, good afternoon. My name is Darryl Knopp. Welcome to FICO's LinkedIn Live. This is the first episode in my digital banking LinkedIn Live series, and I'm really excited to kind of be talking to an ex-coworker, a good friend of mine, Alex Johnson. I'm Darryl Knopp, as I mentioned, a senior director of portfolio marketing here at FICO, and a glorious background. I was doing the math this morning, 29 years in banking or associated with banking. So next year will be my 30th anniversary, whatever that is. This series is built around focused on the 11 commandments of digital banking, which Alex and I actually worked together to create, got to be a year and a half now, and it's been through some refinements. We're not going to talk about all 11 today, although we'll probably overlap with some of the others. We're going to focus on three. The first, and these are, when we looked at these were in a specific order. Digital lift and shift is not a strategy. Number two, friction, not inherently good or evil, one of my favorites. And number 9, be fascinated by your customers, not your technology. And we'll break up the other 8 in the remaining episodes over the next few months with several other guests. This episode is part 1 of a 5-part series. Before joining marketing, I started in the digital banking advisory group at FICO, and I spent every day working with clients, researching the challenges and how the digital channel, primarily focused on the app channel or mobile channel, needs to be thought of versus how traditional branches are thought of. Fortunately, as I mentioned, I've spent 30 years in financial services. So I've been on this journey for a long time. Hey, Alex, why don't you introduce yourself and give us a bit of your background?
Sure. Yeah, absolutely. As Darryl mentioned, we are former coworkers. I worked at FICO in marketing and business development for about 5 years and had the privilege of working with Darryl directly. Since then, I have joined Cornerstone Advisors, where I am a research director focused on Fintech. And my job is essentially to study the intersection of Fintech and banking and all of the interesting kind of collisions and things that come out of that. So plenty of work to do, very, very busy, jump across a lot of different research topics and get to spend a lot of time talking about some of the trends that we're going to talk about. I don't have nearly as long a history working in banking as Darryl. The other way that you can measure Darryl and I against each other is by asking us how many apps for different fintech companies we have on our phones. I think at last count, I was at maybe 25 to 30, but Darryl, I'm going to put you on the spot. How many like fintech and banking apps do you have on your phone?
Well, and I went on a bit of a bender recently on crypto and decentralized finance. So I'm at about 160 with probably 50 active relationships, which is a bit much.
Yeah, you're sort of an outlier on a lot of those.
I'm not making anybody any money. Have no fear.
No, right.
Well, Alex, let's jump in. So, I'm going to ask you a series of questions, and then maybe I'll respond with intelligent banter, or at least some banter to what you say. Let's jump in. So financial institutions, auto lenders, and insurance companies have been undergoing a digital transformation for some time now. And those of us close to it, of course, we've been observing that. But with the COVID-19 pandemic requiring them to kind of accelerate their efforts, despite this increased focus and investment, many organizations continue to struggle with their digital efforts. Can you comment on why you think these organizations may be struggling?
Yeah, it's interesting. A couple of years ago, we do a survey at Cornerstone every year. And one of the questions we always ask is, are you going through a digital transformation project? And, a couple of years ago, believe it or not, there actually was a small percentage of bank executives responding to that survey who said they weren't doing digital transformation and they had no plans to do digital transformation, which was shocking to me a couple of years ago. And I think the big thing that's changed since the beginning of the pandemic is that number, if it was big at all, is now basically practically zero. So everyone is embarking on, in the middle of, maybe coming towards the end of a digital transformation initiative that sits over top of a large part of their organization. I think where we are now is not so much a resource prioritization issue, which maybe it was in the past. Digital just wasn't quite getting enough resources or attention. It's not that anymore. I think the challenge is more now, like organizationally, how is the project being tackled? I think it's more of a mindset problem. A lot of the banks that I speak with, and Darryl, I'm sure you can comment on this as well, are trying to carry over a lot of old assumptions into these new channels. So the idea they have in their head is, okay, digital transformation, we take our existing business models, our existing ways of making money, our existing products, and we pour all of those over to digital. And maybe we close a couple of branches, maybe we hire some really great sort of user experience folks, and we just sort of build a product and an experience that's competitive with fintech or with some of these technology companies that we're worried about. And the reality is that's not going to solve anything. And we're already talking to some banks that have gone through digital transformation, sort of feel like they're at the end of the effort that they plan to undertake and aren't seeing the results that they were expecting. And it's because they're porting over those legacy assumptions and legacy products rather than sort of stopping and thinking about, okay, what can we do new or different that creates more value for our customers that's not based on old ways of thinking or old patterns or old kind of product designs that maybe aren't as relevant or aren't as valuable to customers today. And I think that mind shift set is starting to happen at some of the more progressive institutions, but that's where the long pole in the tent is from my perspective. I don't know. What do you think?
I think that's a great point. I mean, as I've mentioned, I've been at this a while, and I remember back in the late '90s as we started to work on in big ways around internet initiatives. We really thought that in 5 or 10 years the branches would be 1/5 of what they were, and that all of the products and services would be offered. And really only in the last 5 years have we started to see meaningful reductions in branches. And again, I don't want to sit here and say that there isn't a place for branches or no place to face-to-face banking,
Sure.
because there absolutely is. And I think that the large banks that have bricks and mortar and multiple channels are in an excellent position to kind of continue that. But I'm a big proponent, having spent some time in an advisory function at FICO, advising banks in the digital channels. In many cases, you got to get it, like you said, you got to get out of your own way. And part of this is looking at your culture. And
Yeah.
do you have a culture that supports change? Because I think that one of the biggest hindering factors is if I'm not compensated properly to incent me to do these changes, if I have a culture where I have to risk my job to make changes like that, you'll see these organizations, well, let's kick the can down the road to the next individual, because you're going to get promoted every 2 or 3 years and you'll go on to do something different.
Mm-hmm.
So you've really got to think about how you want to incent people, how you're structured, how your products are, being offered. And then, to the extent that, you've got to really think about what products do I need in this channel? Do I have those? Do those products exist?
Yeah.
And then, we'll get into it a little bit when we talk about friction a little bit more, but really talking about what kind of experiences, right? Don't just, this idea of, that I'm sure I was complicit with back in the late '90s and early part of the millennium, was just taking the data that I needed from that form and dropping it into an internet context, and then, getting back to people later, because of course we weren't doing real-time or near real-time decisioning back then. So I think that's an excellent point. So let's jump in. Online retail with the likes of Apple and Amazon and eBay and others have been paving the way for digital commerce for quite some time, and we're well into that from a maturity standpoint. What impact, if any, do you think that the online retail industry has had on banking customer expectations?
Yeah, I think it's had a huge impact, and it's something that we pay lip service to a lot, I think, in banking, where we talk about, now your customers' expectations are set by Amazon and Apple and Netflix and Uber. And we say that. We've been saying that for a long time. I swear 5 years ago, maybe a little longer, the Uberification of banking was like every article that I was reading, and it was really getting quite annoying. And now it happens with different companies, but it's this pattern that we play out over and over, where we sort of pay lip service to this idea that, oh yeah, we have to meet the same expectations that they provide. But it's interesting because when you sort of scratch under the surface a bit at that statement, and you're like, okay, so what are you actually going to change about the way that your processes work or the way that your business works to really deliver that experience, that Uber experience, that Netflix experience, that Amazon experience? Like, what are you going to change about your business in order to do that? And you really press bank executives on that. And what they come back with frequently is they kind of hem and haw a bit. And they're like, well, I don't know that we are going to make that many changes. But like, you have to understand, banking is different, right? Banking is special. It's more regulated. Our customers have different expectations, all of these same sort of things that you hear. And at the end of the day, when you run the imperative for change through that gauntlet of all those different excuses, very few ideas make it all the way through that gauntlet. And kind of like what you were saying about culture, like there's this culture of not having to get to yes, you can just immediately get to no through any number of these different sort of built-in excuses that you have. Now, there are reasons why banking is different and there are things that you have to do, but I'm a big proponent, especially when it comes to meeting expectations that are being set outside of your industry, by starting with first principles, right? And really sitting down with a blank sheet of paper and going, okay, what is it that we actually have to do here? What are some like immutable laws of banking that we can't change? And what are all of the things that we do because it's easy, or because we assume that we have to, or because we didn't press back hard enough when we were talking to the lawyers and running our idea by them 10 years ago when we came up with this? And what are all of the things we can change? And then figuring out just how big a box you have and the parameters you can play within that box. I think that's incredibly important, first principles thinking, in order to be able to understand just how close you can get to creating an experience that's comparable to some of those experiences outside of banking that you're worried about. And again, you might not get exactly all the way. You might not even want to. Your customers might not want you to be exactly like an Amazon or an Uber, but they want you to get closer than you are. And in order to do that, you need to sort of break some of those assumptions that have been killing these ideas that have been trying to make their way through banks for a decade or more.
Yeah, I mean, you make some great points there. The way that I look at this, and I helped start up an online lending business back in 2014, as you know,
Right.
and there was only a couple of us, and I was the only member, kind of the first five, with a banking background, with a true retail banking background and a risk management background. And in many cases, I thought, oh, this is going to be such heavy lifting. These guys don't know what they're doing. They don't know banking. They're asking these weird questions. And the reality is they had it right. Right.
Mm-hmm.
If you're really trying to reimagine an experience, and you bring in my case, you bring in, like I said, 29 years of bias,
Yep.
it's hard to get away from that. Right. And yes, I mean, I spend a lot of time trying to modify that bias and have it open up a bit with looking at digital banking experiences. But I do think it's you got to get out of your way a little bit. And I think if we look at the last 5 years, and like I said, I started the online business in 2014, and what was friction back then is not friction now. Like linking a banking account today is incredibly easy from a certainly from a US perspective. People are quite comfortable with it. There's a lot of security around it, and the way in which you can take people through the experience, have them understand how to use it. It's quite common now, and so it's not. It might have been a 9 out of 10 friction in 2014, and now it's a 2 or a 3, and done well, and bringing value from all that data. And there's tremendous value you can generate from that data. All of a sudden things are changing. And so I think that, the banks have to really think through that process, or financial institutions have to think through that process, as well as, there's a lot of, we've spent the last decade or more educating regulators as well on what can be done. And so the whole idea of RegTech and a lot of the compliance work being done, or a lot of fintechs focusing in on how to solve those problems, really do help the whole financial industry. And so I think that's kind of a special one. Because I think that's the one that gets in the way more than anything. Legal and compliance, the challenges there, anti-money laundering, anti-terrorist money. These are real serious problems that have to be addressed, as well as to bring on these kind of positive experiences. And you and I, as you know, I got the Apple Card probably, I don't know, a year or more ago now, and under 60 seconds, I had a card in my Apple Wallet with very little data. Of course, Apple has a lot of data on me, but the experience is incredibly fluid. It makes sense. It's logical the way things are presented. And, there's dozens of other examples, but I think, Apple's a good one. I think Lemonade Insurance is another great one when you look at their onboarding experiences. And they've really thought about how it's not about making it as short as it can be. It's about making it as intuitive, engaging as it can be. And that's, I think, a little bit of a difference. So, when online retailers and those kind of at the forefront of digital experiences think through processes, they're not thinking about technology. They're not thinking about the data that they need. They're thinking about the experience that they're trying to generate, the emotion that they're trying to generate. And I think it's fascinating when you think about it. Let's jump. So, when we've talked a bit about what some of the challenges are, what can financial institutions and auto lenders and insurance companies do to close the gap between these their digital transformation and customer expectations?
Yeah, I mean, I think it's what you were just outlining, right? I mean, you have to start with what you want the experience to be for the customer and to very much like live deeply in your target customers' problems that they struggle with on a daily basis, and be really honest with yourself internally and your teams about where they struggle with your products, what your products don't do, how they don't address all of their needs, and just being really sort of honest and taking an unvarnished look at that. And I think it all kind of stems from that sort of continual empathy with users, and then sort of using that empathy to drive into changes that you have to make, including ones that are, as you're saying, kind of uncomfortable, right? And I mean, I think the guiding light for any of those changes that you're making needs to be value to customers. And again, customer centric, value to customers, putting the customer in the middle of your business, all of these are trite sound bites that we've said a million times. It's much harder to live that, right? Because
Yeah.
the consequence of doing that is, just to run through a lot of like different big tech examples, right? I mean, Netflix suffered greatly. I remember it when they announced that they were splitting their streaming business and their DVD business, right? Like people freaked out about that. I freaked out about that. But Netflix had looked at it and figured out this is exactly when bandwidth in most homes will reach a point where streaming is going to be viable. This is going to be a better experience for customers. I mean, I can't believe we used to get DVDs in the mail. We did, but like it's so archaic to me now. It's like walking into a phone booth. It's crazy. So they bet their company on that and made a big change that wasn't necessarily popular with the public, with the press, or even necessarily with customers. Jeff Bezos spent a decade plus having just horrible earnings calls with analysts who were just hammering Amazon on, more money back to shareholders, larger dividends, quit like pouring every dime you have back into your business. But he was set on, we have to make sure we're driving the best possible outcomes for customers, even if it means I have to have some uncomfortable earnings calls with shareholders and with analysts, right? And so all of these consequences that come out of putting the customer at the center of your business, a lot of them are uncomfortable conversations. A lot of them are friction internally, people leaving the company. And I think it's that level of like dedication to we're always going to do what's best for our users and our customers that really is the center of it. And I think, what we're seeing right now in banking with overdraft and the changes that banks are making to overdraft policies or cutting overdraft fees, that's a good example of banks actually suffering pain in order to do what they know is right for customers. And I think it's that type of pain that you have to get used to always be sort of closing that gap and staying close to your customers' expectations.
Yeah, I think you make some great points there. I think it's there's a couple of things that pop into my mind immediately. I recently joined the market. I joined the marketing department last April, not long after, of course, you left, Alex. And
Yes, I knew you were coming, so I had to get out of there.
yeah, exactly. I do not blame you at all. At the time I had this great business coach, and he gave me a couple of phrases that were about the specific shift I was trying to make. But when I got them, I started to really think through them and some of the digital transformation work that I've been doing. And they were, one, feedback is a gift and seek it from a broad audience. And so,
Yep.
I took that one from an experience standpoint. So, well, it's well and good for me to go through an experience, but what about someone who hasn't been through before? What are their expectations on opening up a savings account? And I was talking to Eric Wells, who's our head of FICO Advisors here at FICO. And he said he asked his son about it, and this was a few years ago, and he had no pre-existing expectations other than those for the digital accounts that he'd opened in other industries. So whether it be an Uber account or whether it be an Amazon account or other things, and I thought was very interesting to me. So kind of seek feedback from all kinds of places. In many cases, try to remove the bias, as well as try to get some of the people who already have a bias to go through it as well, because those are both your customers. The other one that I really liked was, people don't care what you know until they know that you care. And that's really about personalization and humanization of experiences. In the case of his advice is that, Darryl, you've got this long background and great experience and great knowledge regarding the financial services industry, but they're not going to care until you understand the challenges that they have. And so when I flip this into looking at digital transformation, digital banking experiences, it's that you can be engaged. I mentioned this already. You can be engaging. You can have a different experience. And it can even be longer. It just has to be better, right? More engaging, more interesting, more informative. Tick the boxes that need to be ticked. And in many cases, if you have to add an extra screen with some locks and other things to convey security, you must also be security,
Yep.
have security. But to give people an understanding that you're actually doing these things, it is fascinating. Well, let's jump to the next question. I know we got about 5 minutes left, give or take.
Yep.
We'll tackle this one. Well, with the increase in online transactions, is there anything else institutions kind of need to keep in mind?
Yeah, I think you just hit on it, which is I think the security and safety is one you just can't ever get away from. This goes back to what I was saying before about everyone thinks banking is different. Here's one way banking actually is different. People take their money very seriously, right? And so there are things that you just have to have if you're dealing with people's money that you don't have to have if you work in other industries. And this is a place where I see fintech companies screw up a lot, is they just sort of underestimate the importance of conveying security, conveying safety. They tend to chronically underinvest in customer service. And so if you have a problem with your money or your money's not where you think it's going to be, there's no one that you can call. You have to wade through a bunch of automated systems in order to try to get an answer. So I think there are areas where you need to never underinvest in order to sort of make this shift to online feel safe for customers. I always think back to very early days of e-commerce, which again, kind of hard to remember now that we've been living in this sort of COVID world and we buy everything online and we never go into stores. But 15 years ago, not safe to buy things online, scary to buy things online. You were like constantly worried that it wasn't going to work or that your identity was going to be stolen or that the thing you tried to buy shows up in its empty box. And we forget like just how much foundational work companies like PayPal did to just make shopping online feel safe. And now it does. And now everyone sort of benefits from that. And so I think that as we try out these new products and these new value propositions delivered digitally, and as we try to bring non-digitally native consumers into these experiences, right? Older consumers who now during the pandemic have really seen a big shift in their behavior and usage because they've stayed away from the branch and they've embraced more of these online channels. For them particularly, you have to make this feel safe. You have to make it feel sort of welcoming and comforting, as you were just saying. And if you do that, I think that's an area where banks have a natural advantage and one they should lean into.
Yeah, it's a great point. I know there was lots of other things on our topics to discuss today. A couple things we've got maybe a minute here.
Sure.
I'm going to skip kind of the rest of the questions. There's two big things I'm kind of, we were looking at and we talked a little bit about that are really exploding this year. In fact, over the last couple of years. And I think BNPL being one of them.
Yep.
I know you got an opinion on this one. I read a recent opinion of yours, and also then kind of this idea of rebundling. So why don't you take 60 seconds and do a brain dump on those two topics?
Sure. So I think they're kind of part and parcel of the same thing. On the rebundling one first, what's happening from a fintech perspective is fintech companies started with a specific wedge in order to break into financial services. Some of it's in deposits, some of it's in investments, some of it's in lending. Buy now, pay later is one example of a wedge that's been very effective. And that's how you gain customers and gain market share and gain investment and be able to scale up into a sizable competitor. Gain data, exactly. And now the next step is bundle together a bunch more products in order to try to further monetize those customer relationships and increase your lifetime value per customer. And that's a very sort of standard playbook within banking. It's cross-sell, it's universal banking. And so banks, I think, can expect to see a lot of fintech companies starting to look a lot more like banks and acting in a lot of ways more like banks, but in a more modern, digital, probably more customer-centric approach. So I think there'll be lots of interesting lessons to learn there. And then on the buy now, pay later one, we saw buy now, pay later purchases in the US increase from 24 billion in 2020 to 100 billion last year in 2021. And so buy now, pay later is exploding in popularity. Pay in 4, where you split the transaction into 4 equal installments, is particularly popular. And I think in a lot of ways, and this is what I wrote a little while ago on my newsletter, I think that type of pay in 4 buy now, pay later is actually replacing overdraft as kind of a short-term credit product, particularly for credit invisible or thin file consumers who are just starting to build credit. And now that buy now, pay later companies are going to start furnishing data to the credit bureaus, it can actually be an on-ramp into the credit system. So buy now, pay later is definitely an area that banks need to be thinking very carefully about. And it's one that I'm going to be doing some research into over the next couple of months.
That sounds good. We could spend all day talking about BNPL and rebundling. I think the rebundling interesting. I spent a bit of time looking into decentralized finance, and I think there's an overlap with a lot of this as well.
Oh, totally.
And so let me with that maybe let me thank Alex specifically, and thank you all for tuning into this first episode of my Digital Banking LinkedIn Live series. I'll be back next month to talk about humanizing the digital banking experience, and stay tuned for those updates on the FICO page. If you're interested in learning more about the 11 commandments of digital banking, please click the links below to receive the ebook and access to the new FICO blog post. Alex, thank you again for taking the time with me today. And listen, everyone have a great day, specifically you, Alex.
Thank you very much.